Palantir Technologies has experienced remarkable success in 2024, with its stock surging by an impressive 290% year-to-date as of now. Calling this performance strong would be an understatement. The past month, in particular, has been outstanding for Palantir investors. The stock has jumped 62% since the release of its third-quarter results on November 4th. A key driver of this surge is the growing demand for artificial intelligence solutions. Businesses and governments are turning to Palantir to help them implement generative AI into their operations. This has not only accelerated the company's growth, but also created a promising pipeline of future revenue. Despite this success, Wall Street analysts are skeptical about Palantir's ability to maintain this momentum in 2025. Let's explore why. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. The 20 analysts covering Palantir have set a one-year price target of $38 for the stock. This suggests a potential 43% decline from its current levels. Additionally, 35% of these analysts recommend selling Palantir stock. Meanwhile, 50% have given it a hold rating and only 15% recommend buying it. Furthermore, the highest price target for Palantir, set at $75, indicates that the stock might rise by just 12% from its current price within the next year. One of the key reasons analysts are cautious about Palantir is its valuation. At present, the company trades at a significant 62 times its sales. Its trailing price-to-earnings (P/E) ratio stands at an extremely high 342, while the forward earnings multiple of 137 suggests an expected improvement in profitability. The stock still appears highly overvalued. It's important to compare these metrics to other companies in the AI space. For example, Nvidia, a leading AI pioneer, is growing at a much faster pace than Palantir while maintaining a more reasonable valuation. Nvidia's latest quarterly revenue surged by an impressive 94% year-over-year to $35.1 billion. Meanwhile, its earnings climbed 103%, reaching 81 cents per share. In contrast, Palantir's Q3 revenue increased by 30% to $726 million, and its adjusted earnings grew by 43%, reaching 10 cents per share. Of course, this comparison isn't entirely straightforward since Nvidia is primarily a hardware company that has also achieved significant success in AI software, while Palantir focuses exclusively on software solutions. However, Nvidia's ability to grow rapidly despite its larger size, combined with its much lower forward earnings multiple of 32, makes it a more appealing AI investment at the moment. On the other hand, Palantir's lofty valuation creates risks for investors. If the company fails to consistently deliver robust growth each quarter, it could face significant sell-offs. To justify its high valuation, Palantir must continue exceeding growth expectations and strengthening its financial performance over time. While there is no doubt that Palantir's valuation suggests that the stock may have run ahead of itself, there are a few things that are working in the company's favor and could be tailwinds for the stock next year. First, Palantir's revenue growth rate has improved in each quarter of 2024. Its top line was up 21% year-over-year in Q1, followed by a 27% increase in Q2. We have already seen that it clocked a 30% revenue jump last quarter, driven by the robust demand for the company's AI software platform. The second reason why Palantir may be able to sustain its impressive rally is the impressive growth in its customer count and deal size, which are allowing it to build a healthy long-term revenue pipeline. More specifically, there was a 39% increase in Palantir's customer count last quarter. The number of $1 million deals signed by the company increased to 104 from 80 in the year-ago period. As a result, the remaining deal value of Palantir's contracts increased by 22% to $4.5 billion last quarter. Considering that this metric refers to the total remaining value of contracts the company was sitting on at the end of the quarter, its impressive growth suggests that Palantir is in a position to keep growing its revenue at a nice pace in the long run. The third reason why Palantir may still seem attractive to growth investors is its strong unit economics. The company's non-GAAP operating margin in Q3 stood at 38%, up from 29% in the same period last year. Unit economics refers to the profit made by a company from each customer or product it sells after deducting expenses. Favorable unit economics suggests that Palantir is making more money from its customers now, and that's not surprising. In the company's November earnings conference call, management gave several examples of its customers expanding their contracts after signing up to use its solutions. That trend could continue in the future, as the AI software platforms market is currently in its early phases of growth. IDC forecasts that the spending on AI software platforms could jump from $27.9 billion in 2023 to $153 billion in 2028. As a result, the adoption of Palantir's offerings is likely to improve further in the long run, and its strong unit economics should ideally allow it to maintain its impressive earnings growth. The above factors explain why analysts have increased their earnings growth expectations from Palantir for 2025 and 2026. If Palantir manages to continue outperforming analysts' expectations over the next year and attains stronger levels of revenue and earnings growth, there is a good chance that it may be able to justify its valuation and head higher in 2025. Conservative investors, however, would do well to look at other options if they are looking to capitalize on the AI boom, as Palantir's expensive valuation makes it prone to volatility. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.